So I think it starts with Bitcoin solving the thing that I brought up earlier about the mismatch between transactions and settlement speeds. Um, so from literally the invention of the telegraph until just before the invention of Bitcoin, we didn't have fast settlements. We had fast transactions, but we didn't have fast settlements. So we had an inherent, really big mismatch. And what Bitcoin kind of is the invention of fast settlement, fast digital settlement. It's a way to send value to someone that is now permanent, final settled value, unless, of course, the majority of the network of many different entities decides to reverse it, which is not really a thing that happens.
Bitcoin's journey toward a potential $120,000 price point is more than just market speculation. It's a reflection of its growing role as a transformative financial asset. Since its creation in 2008, Bitcoin has revolutionized financial systems, solving inefficiencies like settlement delays, reversals, and centralized control. By leveraging its decentralized blockchain, Bitcoin enables fast, secure, and final transactions, making it a cornerstone of modern finance. Lyn Alden emphasizes that Bitcoin's ongoing bull run showcases its unique ability to bridge the gap between transaction speed and settlement certainty, creating a seamless global value transfer system. The surge in institutional adoption and the rise of decentralized finance, DeFi, highlight Bitcoin's expanding influence as a hedge against inflation and a store of value. As Bitcoin's price trends upward, its resilience through market corrections signals a broader financial revolution. Alden's analysis underscores that this rally isn't just about short-term growth. It's a validation of Bitcoin's profound and lasting impact on the global economy. Watch clips from Lyn Alden's interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think that it's cool that option exists for people that wanted to. I don't really see it taking off. And I've touched on that kind of system before. One is that it's involved in a chain of credit. And credit isn't necessarily always a bad thing. Sometimes credit gives you efficiency. But the problem with that system is you have to rely on credit. So with Bitcoin, you have the option. You could use it non-custodially. You could use it custodially, depending on what your preference is for efficiency. Maybe for working capital, I don't mind having a little bit of custodial. Whereas like for savings, I want it non-custodial. People can pick whatever they want. With gold, there's no choice. You have to go through this like layered chain of custody with that whole process. Secondarily, gold, the supply inflates by about 1.5% per year on average due to new mining. So you're choosing to hold the money that has less debasement than fiat, but more debasement than Bitcoin over the long run. And it generally kind of goes against Gresham's law, which is people, if fiat currency exists, there's not a big incentive for people to say, I want to hold gold and spend gold. They'll say, well, I'll hold savings assets, whether it's gold, whether it's Bitcoin, and I'll just spend the fiat. That can be someone else's problem. Like I'll just spend fiat for things, and that circulates with higher velocity. I just don't think there's a lot of people for which that solution is solving a problem for them. And instead, there's just a fairly small number of people that are more ideological about it. They want to hold gold, and therefore they want to be able to spend their gold, which is great that solution exists for them.
Yes.
And people often say, well, why can't you make a gold-backed crypto? And the answer is there are. There's gold-backed stablecoin things, and there's a market for it. It's not a very big one, and it's just not solving a lot of problems that people have. And one of the things I like to point out, again, I go back and forth between the United States and Egypt. Regardless of where I am in the world, there are ways to access my Bitcoin. Like there's, you can have all sorts of multi-sig, collaborative custody, globally dispersed keys and things like that. And so, and with gold, when I'm in Egypt, I can't access any gold I might have in the U.S. When I'm in the U.S., I can't access any gold I might have in Egypt, other than through trusted third parties. If I hold my gold in a vault in Singapore, and that's great, but it's this chain of custody. And so it's not that it's not a solution. It's just that it's clearly a limited solution. It doesn't kind of fundamentally solve the problem. It just kind of band-aids the problem. And to be clear, I mean, I I like gold. I've owned gold for quite a long time. Um, I certainly prefer it over government bonds, between the two. So I don't consider myself an antagonist for gold bugs. It's just that I view Bitcoin as doing a lot of things that gold proponents wished that gold could do.
Lyn Alden underscores Bitcoin's transformative role in addressing the limitations of traditional financial systems, particularly gold-backed currencies and credit-based systems. Gold, historically a reliable store of value, suffers from annual supply inflation of around 1.5% due to mining, which erodes its value over time. Bitcoin, with its fixed supply, stands as a more inflation-resistant alternative. While gold-backed cryptocurrencies exist, Alden points out their limited appeal and inability to address core issues like accessibility, making Bitcoin's decentralized and globally accessible nature a superior solution. Alden also envisions Bitcoin evolving into a dominant global asset, potentially rivaling gold's $20 trillion market. She highlights Bitcoin's growing adoption and universal accessibility, contrasting its appeal with the constrained utility of fiat currencies like the Egyptian pound. Drawing parallels to the Internet's disruptive evolution, she predicts Bitcoin will significantly reshape the global financial system, pressuring traditional currencies. Despite potential challenges, such as quantum computing, Alden asserts that Bitcoin's structural innovations ensure its long-term viability and its position as a scalable, reliable asset for financial security. Let's get back to the video and watch more clips from the interview.
So I think 10, 20 years, I think it increasingly becomes global capital. I think that right now, the network size is like under $2 trillion. I think that first we got to get as big as gold, which now with the price increase is estimated to be something like 20 trillion or 15 trillion, something in that ballpark. So I would say first we have to add another zero to market size, because one of the ways I describe it is that Bitcoin is money, but it's not a super densely saleable money in any one area. So if I take the dollar, let's actually take a simple example. If I take the Egyptian pound, it is very saleable in Egypt. With Egyptian pounds, I can buy almost anything from any merchant. As soon as I go outside of Egypt, that is terrible money. And it's because it's got this monopoly in Egypt and this cultural acceptance of it. But then it's almost useless anywhere else. And most currencies are like that. A couple top currencies like the dollar and the euro, they are very saleable in their own jurisdiction. And then there's still a number of ways to transfer exchange it outside of the jurisdiction, but there's more friction there. Bitcoin is interesting because in most urban centers in the world, you can find some people that would accept Bitcoin. Or at the very least, if you have Bitcoin with you, you could find someone to transfer it for the local currency and then spend it fairly easily. Certainly easier than I could get Egyptian pounds off my hands here in the United States and quickly just go buy something with dollars. And so it is gradually monetizing, but doesn't have a very dense base. But I think that over time, as it gets larger and larger and larger, that starts to become more relevant. The other big thing is that governments try to hold it back with capital gains taxes, so that every single transaction you do is you have to record it and pay taxes on it. And there's some, El Salvador has eliminated that. Over time, you could see more countries start to get pressured by their people to eliminate that and elect politicians that eliminate that and just make it a money. So I think when we're talking 10, 20 years, I think we're talking more like becoming a really big global asset with some monetary characteristics. But then eventually in the longer arc of time, it has good attributes for money, in my opinion, and will increasingly pressure fiat currencies. I think digital money with zero debasement is a pretty powerful long-term concept. And Bitcoin does gradually update over time. So, the Ethernet that we use now is not the Ethernet that was invented 50 years ago, but it updates in these backward compatible ways. And so I think that, it'll update over time. Maybe no line of code Bitcoin 100 years from now is the same line of code that it is now. But I think the concept and the chain of continuity of network effects has a very good chance of persisting for the foreseeable future. that it's very powerful long-term money that it's hard to imagine that getting displaced. Now, we can imagine risks like quantum computing, and then does it have to do a hard fork to become quantum hard? And the UTXO set transfers over. I mean, I can imagine different scenarios for what it looks like in the far enough future. But I think for any sort of investable time horizon, that this is a structural upgrade. So most fintech upgrades over the past century and a half were about adding new layers on top of the existing system. So increasing centralization, increasing efficiency, but not really changing the root of it. Bitcoin is the first kind of creation in like a century and a half, where again we have fast settlement now. That's actually a really big invention, and that has very long term implications. That is not just a minor. It's not just a one new thing that exists now. That's a pretty foundational thing that I think as it builds a network effect over the long term, does fundamentally change how we think money is.
Bitcoin's recent surge to an all-time high of $104,088 highlights its growing role as a transformative global asset, aligning with insights shared by Lyn Alden. Trading around $98,500 on Monday, Bitcoin's meteoric rise has drawn the attention of institutional giants like Amazon and Microsoft. Shareholders at Amazon have proposed using Bitcoin as a reserve asset to hedge against inflation, while Microsoft is considering adding Bitcoin to its balance sheet, moves that echo Alden's view of Bitcoin as a scalable and reliable alternative to traditional assets. Institutional demand continues to climb, evidenced by a record $2.77 billion net inflow into Bitcoin spot exchange-traded funds, ETFs, last week. Alden's analysis of Bitcoin's fixed supply and resistance to inflation underscores its appeal amid such growing adoption. Analysts, including Oros's managing director Lashi, see this rally as the early stage of a bullish cycle extending into 2025, mirroring Alden's belief in Bitcoin's long-term viability. Despite bullish momentum, Bitcoin's price could face a short-term pullback, with analysts eyeing $90,000 as a support level before reaching a projected all-time high of $119,510. Lyn Alden likens Bitcoin's evolution to the internet's disruptive growth, emphasizing its resilience despite challenges like past market collapses and emerging risks. Bitcoin's ascent from under $15,500 2 years ago exemplifies its durability and potential to reshape the financial system, reinforcing its position as a dominant asset in both institutional and retail portfolios. As we wrap up, what do you think about Bitcoin's future growth potential? Do you think Bitcoin's fixed supply is the main factor that will lead it to surpass gold in value? Let us know your thoughts in the comments below, share this video, and don't forget to hit the like button. Thanks for watching, and don't forget to subscribe.